The dollar has enjoyed a premium in the market ever since Bretton Woods, when all commodities were valued in dollar terms, and anyone who wanted to buy a commodity had to buy dollars first to buy the commodity. We're seeing it was Russia and China that first came along and started saying, well, we want you to use rubles or wons to buy. Those currencies still do not have the breadth that the dollar has in terms of usage. But as you pointed out, there are other countries that are lining up behind and saying, well, we'd like to enjoy the benefits that the dollar had, being able to be the reserve currency. I don't think we're quite ready for that, but the cracks are appearing along the wall, and that is a definite direction. And the sanctions that are being placed on these countries will just accelerate that demand. The world used to play all sorts of currencies, and then we standardized, made the euro and then the dollar, and those are really the two. And commodity prices are going up all over the place.
Right.
I think we're heading back into that space where we have multiple currencies, and the hard assets will increase in value as the dollar drops in relative value to the other currencies. Governments are irresponsible. It doesn't matter where you go in the world. They steal from their citizens by printing excess money and borrowing in ways that they shouldn't. So they burden the economy. You look at the amount of debt that most of the Western world has right now, it's enormous. And with interest rates going up, how are they going to service it without crowding out all the other services they provide? The US dollar has dropped in value, that people are going to harder currencies, that there is some pain occurring. Maybe real estate prices might be feeling it because they're less liquid. You have to remember, gold has a very special element. It is liquidity.
Yeah.
You can sell your gold in 2 days and get your money. If you want to sell your house, it rarely goes in 2 days. Maybe it went a couple of years ago when there was all sorts of speculation. The cost of getting gold has gone up in price, so you're just ratcheting up the price. I think a lot of currencies are going to become less valuable. I was looking at an article the other day, they were talking about Lebanon, and in 1997, the exchange rate was 1,507 Lebanese pounds for $1. At the end of December last year, 15,000 Lebanese pounds bought $1.
Yeah.
And right now it takes 80,000 pounds to buy a dollar. That is a country that's been suffering civil war. A lot of the production base is gone, but we've demolished a lot of our production base and outsourced it. If you're feeling very uncertain, you might want to buy bullion. Bullion's outperformed the equities so far, but it's safer. You could then go into an ETF, although there are fees attached to that, and you might want the physical so you can walk away. You look at gold shares. Which company do you buy? You buy the seniors, they pay a dividend. So you get a bit of an income, and they'll be a target of a lot of the institutional buying. I personally live in an area which I would consider high up the risk curve, and that's in the junior space, right, where you can see stocks trading for pennies that go to dollars when you get the right cycle. And that's, for me, and I probably am not your normal investor. There's an announcement that I'll be owning 37% of a junior called Satori, and it trades for about maybe, they made the announcement it was 5 cents, it's now, I think it was up to 14 or 17 cents. But it's probably got a lot more room, and that's why I bought it. And I'm looking at the junior space and seeing we should be bringing a couple of those together to get a bigger market presence and easier to finance. It's just been a very painful decline to where we were. Misguidance, some natural disasters, a flood, a fire, throw in some COVID, a write-down of one of the resources that are mined, and the market I've never seen such a rapid evaporation of goodwill that I had in the marketplace. We bottomed out, we changed some of the players, and the it's stabilizing. Our costs are now starting to come down. Our production is increasing. And we have this large copper project, and copper's become quite a topical issue. And we started separating it, financing it, moving forward. And it would represent 50 to 66% of the asset value of McEwen right now. Right now, we're trading at a substantial discount to our peer group based on our precious metals assets. And we have some growth in there. And then we have the copper, and on the recent deal, basically the implied value is about 550 million. And if you look at that and say, well, that's just under $6 a share just in the copper. So you're getting the 150 to 170,000 ounces of gold a year for free. I think it has real potential. There are two value reference points in Argentina that I can compare our copper project to. There's Jose Maria and Filo. Jose Maria has a market cap of, or was bought out by Lundin for 485 million last April. And Filo is currently trading with a market cap of around 1.9 billion. We are in the same province in Argentina as they are. We're at a lower altitude. Filo, which is the 1.9 billion market cap, its deposit starts at 4,900 meters, which is the same as base camp for Everest, 17,000 feet up. Now, at that altitude, it's difficult to work as an individual. You're short of breath all the time, and machinery doesn't work that well. So we're at a lower altitude. We're 10 to 13,000 feet, and Jose Maria is higher again. We're closer to infrastructure, roads and highways. We are a larger resource than either of them on the published measured and inferred, and we're 3 times larger than Filo. We're 40% larger than Jose Maria. And so you start looking at that and saying, well, we have all these positive attributes and superior traits, I'd say. They are, however, more advanced, the projects. We're at a preliminary economic assessment and they're feasibility pre. But that's part of the value. If you took Filo's value and said, we're somewhere between $500 million and $2 billion. And right now we've just established with these investments that our project is worth $500 million. So now we're somewhere in between. We've made arrangements to have all the electricity we get at site generated by renewable sources through the Argentinian power company. They have wind, solar, and hydro. We engaged an architect out of Seattle who's very prominent in the green living, sustainable building space and said, okay, the world's changed. We have to build a mine of the future. Help us design that mine of the future. And so he's come up with some really innovative ideas. Most of the equipment we'll be using will be electrical driven. We're looking to minimize our water usage and our carbon footprint. And Stellantis says in their goal is to be carbon neutral by 2038. We hope to be there before then. Well, the original plan for the copper project was to have a mill and a traditional mine, and that uses a lot of water and uses a lot of power. So the model we're looking at now is a heap leach process. So it uses a fraction of the water and a fraction of the power required. So that helps us move along. The buildings will be sustainable, we'll be generating power there, food on site. One of the designs for accommodation, it's glass, it's probably about 2 football fields long. It has gardens, it's terraced in keeping with how the Incas terraced their mountain sides to grow food.